Hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, Monica and I had the opportunity to go to Nashville. Oh my gosh, what an incredible place. It was cold. I mean, us desert rats don't do well in the cold weather, but man, we had a great time. We actually had one of my best friends from high school turned 60. I cannot believe it. Now, granted, he's 3 years older than me, so I'm not quite there yet, but we celebrated his 60th birthday and we just had a great time. I went and saw another friend of mine there as well, and so Monica and I just had a blast. We were only there for 3 nights, but boy, what a beautiful place. That I mean, looking at all the honky tonks and all that, we had a good time. So anyways, everybody's good in the family. Jack, Nicole, Emily, they're all doing well, staying busy. Looking forward to all of them coming home for spring break. So that's they're starting to book some flights and things like that, so we get excited about that. Hope you and your family are doing well also. Market-wise, well, we had a pretty volatile couple of weeks here. The so-called DeepSeek company came out. There's a China company that kind of challenged our AI companies a little bit, which could be a good thing. We'll have to see how this thing plays out. I mean, it's kind of brand new. The market kind of had a knee-jerk reaction that perhaps we could produce some of this AI technology a lot less expensive, and so we'll have to see how this plays out. But we got a sell-off because of that, particularly with our big tech stocks. They took a pretty big hit. NASDAQ got hit pretty good. But we recovered rather quickly. We saw the buyers come in kind of quickly, and so we saw things kind of move along pretty good. So January ended up being a pretty good month. All 3 indexes were up for the month, which is good. And typically when we have a strong January, 89% of the time, if we go back to 1950 and we look at the performance of the markets, if we have a positive January, 89% of the time we have a positive year. Now again, past performance is never a guarantee of future performance, but we're off to a pretty good start in January, so that's good to see. The bond market is hanging right around the same. The 10-year treasury, which was at about 4.8%, is right around 4.5%, and we think we're going to remain in a trading range there for a little while. The Fed came out, the inflation numbers came out this last week for December on the so-called PCE, which is what the Fed likes to look at to see how inflation is holding up. And it came out as expected in December, so it was pretty stable, which was good, but it made the Fed feel that they could continue to be slow on reducing rates. So they did not reduce rates at their last meeting. There's talk that they might do it in June. There's about a 70% chance, the market's priced in about a 70% chance that they will lower rates in their next FOMC meeting that's coming up. So there's still a lot of tailwind, I think. I think the consumer spending was strong. Inflation remains pretty strong and pretty good right where we're at. We're not seeing it raise its ugly head again, so that's good. It's remaining pretty stable. The Fed is talking about lowering rates. So economically, things look pretty solid. GDP numbers, again, look pretty good. And the markets are moving along nicely. So we think that there still might be some valuations that might be a little high. So any bad news, we're going to see some pullback. So we have to be ready for the volatility. But overall, we think that 2025 is off to a good start. We think that we should see hopefully a pretty good year this year. So everything's in good order here. Accounts are doing what they should be doing. Of course, if you have questions or concerns or any updates, make sure you give us a call and let us know. Otherwise, my very best to you and your family. Take care and God bless.